You have just priced your shares, or you priced your shares last night. You've raised $1 billion. What do you plan to do with the proceeds?
We'll put it towards, we have a very diligent cash flow management process and approach, and we'll use it to invest in process technology, infrastructure, that kind of stuff.
You also have a partner that's PetSmart. What proportion of that, of those proceeds are going to go to service their debt?
A portion of that 90% could go towards servicing that debt, yes.
You can't tell us how much that would be?
No, I'm not aware of it.
So you're going to focus on technology. One of the things that Chewy has been able to do is capture a big proportion of the online pet supply market. But Amazon has a bigger proportion, and we're seeing other retailers, the likes of Walmart, of Target, really pushing into this area too. How do you plan to maintain that market share and indeed grow it?
Look, Emma, there's a lot more growth in front of us. We are today, if you look at the number of households in the US, we're about roughly 10% penetrated. And then number two, we've shown a unique ability to grow share of wallet. And then three, we have strategic verticals such as private brands. And recently we started, offering prescription medication to our customers, where we want, our healthcare focus, where we want to keep the veterinarian in the center of the equation and really develop that compelling value proposition. There's so many of these levers that we yet had to fire and that we're firing on constantly. There's a lot more in front of us.
So you plan to add services, and that's a big growth area for you?
Our mission statement is to become a convenient and trusted destination for pet parents everywhere. And as part of that destination, as part of that creating that one-stop pet shop, sure, we'll remain open-minded and thinking about services type of a marketplace as well.
So there's a lot of opportunity there. In the last year or so, you've seen enormous sales growth. They grew by more than $1 billion last year. How do you intend to grow that? How do you intend to keep up that pace? Investors will be looking for that.
There, again, $70 billion market, expected to grow at 4 to 5% CAGR. On top of that, there's not only a secular shift from online, we're stepping right into that mix and creating that shift. Our active customers spend more and more the longer they stay with us. Our private brands are getting healthier. Our healthcare offerings are still mature. We have a lot more to do out there, a lot more customers to add, and really continue the value proposition that we've been on.
Now, a big proportion of your sales is through auto ship or customer renewal, automatic renewal. What proportion do you see that growing to?
We've grown that, we've continued to grow that, first of all. It provides us a predictable recurring revenue stream, as you've mentioned, and it's grown from low 60s in the 2016 timeframe to exiting 2018 and 67. We'll continue to add assortment, continue to help our customers build baskets, continue to look at adjacencies that come from these newer verticals that we're launching, and that's how that number stays healthy.
Now, a lot of this is also about service, but a number of companies are now moving to improve their service. For how long can service be a differentiating factor?
Chewy, if you think about this category, pets is the only category where a customer refers to themselves as a pet parent. Service is fundamentally important to it, and we have it because we want it, not because we need it. We constantly invest in our customer service, building experiences, training, learning and development. And by the way, our customer service is scaling below our revenue is. So it's a phenomenal proposition for investors as well as customers and the company. We'll keep doing more of that.